Okay, let's shoot straight into the commodities market. We've seen the Brexit crisis around the world, but what does it have to do with us here at home? Liquidity is a big problem for the banks. 980 billion naira worth of treasuries dumped on the central bank yesterday, that's Monday, to start the current week. Call money up 32%, average interbank up more than about 30%, overnight placements above 50%. That's quite a crisis under the carpet. So how does this feed into anything called about agri-commodities locally? But if you look at the companies related to these on the market, took a very major hit. Let's bring in Opeyemi Oguntade, who is a senior investment officer at Financial Derivatives Company here in Lagos, to talk to us. He's live in the studio with us. Good morning.
Good morning.
Bring us up to speed. Where are we right now? Is there Brexit? Is there liquidity? What are we at the moment? Prices are relatively stable.
Yeah, prices at the domestic commodity front are relatively stable so far this week, and the reason why is because most traders are anticipating the harvest season, which usually comes in towards the end of June and the beginning of July. So
don't we have the early corns on the streets? Folks are eating corn, isn't it?
Yeah, corn's on the street right now.
Yes.
So corn, like we would rightly say, corn is in season right now, but there are some other commodities that are still waiting to be harvested.
So when folks have alternatives, perhaps if you're going to eat corn, then perhaps you're not going to buy flour to make other things, isn't it? So that keeps prices stable. Does it work that way?
Yes, whenever you have substitutes, definitely you have the substitution effect, which leads to a decline in prices for some certain commodities. But we're not seeing any impact in corn prices right now because Ramadan season usually leads to an increase in demand for corn in the market.
Okay, I can see corn there on the screen, but I'm sure a lot of these prices are. Maize is there. Yeah. That maize of 50 grams, that's the one you put in a bag, isn't it?
Yes.
A sack, kind of.
Yes.
Well, have we seen any major shock into these prices because there's illiquidity in the banking system or the financial system?
Well, there is no direct link between the financial system and the commodities market because what we're mostly dealing with here are farmers, and mostly what is affecting commodities is either weather patterns or the dollar, for instance. And what we've seen in the market is that the dollar at the foreign exchange market has appreciated, although in recent times it depreciated marginally. But if we're looking at the parallel market, it depreciated 350 naira. So commodities that are included in 41 items that were banned by the CBN will definitely have an impact from that.
So in other words, the agri-commodity prices are keeping one permanent eye on the new FX market.
Yes, because if we're looking at the fact that the futures market resumed last week, agri-commodities are one of the commodities that benefit from this because most traders would like to mitigate the risk of weather patterns, fluctuations in weather patterns, and so most traders like to take advantage of this. But if we're looking at our Nigerian market, our commodities exchange isn't that developed. Although we have the Abuja Commodity Exchange, it isn't really exactly active, and we're hoping that with this new policy or this new initiative about the forwards and futures markets, we would hope that the Abuja Commodities Exchange will become more active and become a better player in the market.
From the wider world out there, in terms of imports, what have you? Where are we at the moment? Are there weather patterns out there? Are there any of the market situations like a stronger dollar vis-a-vis the British pound and the euro? All those geopolitical, geo-markets, volatility, are they feeding in any way into what we have locally?
Well, in the short term, we haven't seen any significant impact, but looking at the Brexit, in the long term, we know that Britain is one of our major trading partners because of our bilateral trade agreements, and it was usually a platform to which we export our goods to spread towards other European countries. And now that the Brexit has occurred, it means that if Nigeria is going to have to export to other European countries, we might have to deal with some excise duty fees. And so in that case, I mean, although they have mentioned that the negotiations is going to take about 2 years, so in that space we could still benefit from Britain being a trading platform to export our goods. But once the negotiations are completed, then Nigeria would have to incur more costs in terms of exporting to other European countries.
That looks like forward information that we can use. But again, if you come back locally, it looks like things are stable from the local downstream prices of diesel, at the pump stations, petrol, kerosene looks like things are a little bit relatively calm out there. And therefore, we can relatively say that, well, local prices of goods, commodities are...
Yes, well, looking at diesel prices right now, they're about 180, and in some places we're seeing it going for as high as 200 to 210 naira per litre. And a lot of farmers are beginning to complain about the cost, because some farmers that engage in mechanized farming actually do use diesel to power their tractors, which they use for their farming activities. So we're hoping that diesel prices should filter down, and the Minister of Agriculture has
should
said
go further down than 175, 180 per litre?
Well, for farmers, I'm not sure if they're going to introduce some kind of subsidy all over again. I doubt if that would happen. But the Minister of Agriculture has listened to the cries of the farmers and is in talks with the Petroleum Minister to source out diesel for these farmers.
Ah, okay, that looks like something, I'm not sure we anticipated that, but
yes.
It looks like something that is coming. So, would they get diesel from Dangote refinery?
Would they get diesel? Maybe. I mean, Dangote refinery isn't due to start till 2017.
It's about 2 years away or so.
Yeah, so...
So for now, we're going to deal with that as we are. Thank you so much for coming. Unfortunately, as well, some of these issues around there affecting companies listed on the stock exchange with a bit of a tie to the agric, what is Dangote flour, Honeywell flour mills, and the rest, Cadbury, Nigerian breweries, those who use agric inputs. Yeah,
what we're seeing in the stock market right now is that so to speak, the Brexit has resulted in, should I say, contagion in most stock markets in the world. So what we're seeing is pretty much red in that area, and we can't directly link the fact that stock prices are going down to the agri-commodities market, because it's more from the Brexit.
So this is looking from the outside.
Yes.
It looks like just wind's just blowing everywhere.
Yeah, it's an awful month.
Yeah, it's an awful month.
Yeah.
Yes, and call it a very awful month.
Yeah.
And a very. I'm not trying to remember how. Well, I've put this in Frankfurt about what the second quarter was all about. Not quite a very interesting one. But thank you very much for coming. We appreciate that.
Thank you for having me.
Koyemi Ogunta, the Senior Investment Officer at Financial Derivatives Company. Let's continue that conversation with the energy market, still commodities. Look at these 7 big oil or energy traders that we have on our market. Let's start with Falter Oil. On Monday, 5% in the red. That's a red shoot. We have quite a big of the big boys in the red yesterday. Cornell managed to finish in the grey section, as well as Mobile at 169. MRS on change at 34.71 at the closing bell. Now look at Owando shaving off 4.86%, down at 665. Seplat, the only exploration and production company on our markets, on our counters, down almost 5%. Then that's quite significant. Of course, you expect that to happen. Total, however, managed to crawl to 200 naira new price level by 2.56%. The volume driver almost always comes from Owando, 2.207 million units of shares. But check through the summary of that sector. The daily index return, 0.3% in the red when you pull the big boys together, Falter Oil and Seplat. Then if you add Owando to the mix, then you get that about 0.3% south direction in the index. The year to date, that sector is still positive, however, 10%, much better than the broader market, at about 4.3%. Price to earnings, look at how things were we've been really hit in the last couple of sessions. The haircut we've seen dragged the price to earnings ratio, the PER, to 27.29 multiples. The broader market's even a little bit worse than where it was. We were doing 8.0, 8.1, now at 10.5 multiples. And of course, the dividend yield has since been cut back by those losses by the bellwethers to 1.8%. That's the dividend yield if you put the average dividends of stocks in that segment together, including those not covered by the what we do every day, Eternal Oil, and the rest of them. If you put all of them together, that's where the dividend yield, on average, 1.8%. Now, let's talk about the Dangote refinery. That's what you heard from Akwebi Ogutade a little bit earlier. That will should be coming on stream in 2018. Over the weekend, the vice president, the finance minister, the Lagos state governor, joined Aliko Dangote and the rest of his team to inspect that facility. Downtown Lagos, the Lekki Export Free Trade Zone, on hand were other businessmen and associates of the Africa's richest man, including Femi Otedola, who is the chairman of Falter Oil PLC, and you can see the whole media buzz around this petrochemical facility worth about $11 billion is now been touted as the largest in Africa. This is not the first time government officials are coming in to see the progress report from Aliko Dangote. Nigerian governments have his eyes on the facility you've seen on your TV screen to provide not just energy in terms of petrol, diesel, and other byproducts, but also to provide some form of electricity, gas output, and fertilizer as well. That is a mega business here on the shores of Lagos. When that is on stream, in about 2 years from now, we'll keep the conversation going. We'll keep an eye on that project. Everyone's keeping an eye on that project, the first of its kind, not just in Nigeria, but across continental Africa. We're also watching that very closely here in the studios. Join the conversation, as always, as we put it. You know where to find us on Twitter at Channels TV. Harriet, I'm sitting in for her today, CTV Harriet, and of course at B-Bosin, if you want to keep the conversation coming from my end. What's in the news today? The second quarter ends on Thursday. The finance minister says just 109 billion has so far been disbursed in the fiscal allocations for the quarter. The balance will have to be carried forward. July 1st starts on Friday. Keep a date with us here. We'll be back in 1.